Hi everyone, it's Derek and welcome to another edition of Logo Quick Takes. As you know, it's earnings season and the reports are starting to roll in by the dozens. Today, a key alpha brand tied to the consumption supply chain, GE Aerospace, reported Q4 and full year 2025 numbers. The stock sold off 7% on the day, but to be fair, it's been a monster, and comping the comp for 2026 was going to be difficult. But this brand has been executing incredibly well. We aren't worried about the 2026 outlook, and the massive $190 billion backlog provides a long-term safety net for the business. For 2025, GE did $44.5 billion in revenues and generated $7.7 billion in free cash flow. The market had a problem with the 2026 guidance that missed expectations by 25 cents. While growth is expected to decelerate, it was virtually impossible for the company to continue growing at its blistering pace, so this wasn't a surprise. The stock certainly was priced for perfection at 45x earnings and went into the print too hot. We expect GE to revert back to a mid-teens normalized EPS growth with 10 to 12% revenue growth. Margins should pause in 2027 due to some shorter-term structural headwinds, so margins are expected to stay flat year over year. None of these short-term issues change the fact that GE Aerospace is the apex predator of the aerospace industry. The services business is the growth engine, and that also won't change. The defense and propulsion business had solid growth, has a book-to-bill greater than 2, and a backlog of $21 billion. This $190 billion backlog is no joke. Roughly 70% of it comes from services which are recurring, high margin, and hold strong 3 to 5 year visibility, hence the higher multiple. 30% comes from the equipment backlog. The backlog certainly insulates GE from short-term macro volatility, and we suspect that will matter to investors soon enough. With an installed base of 80,000 engines with extended life that requires frequent shop visits with strong pricing power, there's plenty to like with this business. GE has a strong innovation pipeline with the GE 9X for the 777X engine, so the $500 million drag just reported is temporary. With a strong FCF guide at 8 to 8.4 billion, a solid $7 billion buyback authorization, and a 30% increase in the dividend, the business is on solid footing. It's just normalizing. I'll take industrial compounding in an Alpha Brands portfolio all day long. Let the stock come in. Buyers will be back. Thanks for listening. Derek, out!